Good day, AVZ traders. I trust you are well. This is Dr. George, and welcome to broadcast number 98. Now, looking at Swissy, USD Swissy, strategy number 2, low of yesterday, lower AVZ, and we know it's a buy zone, upper AVZ, sell zone, midpoint, AVZ of indecision. So, of course, if the bears are strong, they're going to have to show us that in terms of the breakout below the low of yesterday, below the buy zone. First candle closed here, gap down. At this moment of the gap down, the bears had an opportunity to accelerate down and push asset values lower, but they failed, and those were strong enough. And then throughout Asian session, bulls try to accelerate up and push asset values high, even try and get to AVZ of indecision. Bears continue to demonstrate strength until we got this breakout, second breakout. First, you might even call it third, but we know when we have tails, we reset our count. So effectively, second breakout. Now, here's what's interesting about Swissy. This became the low of today. And it's pretty important because, of course, if the bulls had accelerated up and looked at the next day, tomorrow, they said, well, that's the lowest asset valuation. So it's pretty key. So the bears had a breakout beneath the low of yesterday, but they still had to break out beneath the low of Asian session, low of today. This is going into the open of London session, which was here. And when you have a look at Swiss financial markets and London financial markets, the open is basically the same. So when you get into here, you no longer are looking for strategy number 1, breakout at any time, because you're going into strategy number 1 at the open. Okay, hope that makes sense. But even if you thought, oh, well, okay, I'm still going to look for strategy number 1, first breakout, which becomes a large breakout, that was the first breakout. And the fact that it pulled back, it did not become the breakout that we trade. So anything breaking out beneath here, we're looking for strategy number 2. We're going into the open and we get this beautiful bear breakout candle. At some point, it was all the way down here, but the bulls came back and created the tail. So there is nothing we're going to do until we get test of average prices. Second candle after the first candle, third candle. So bears are pretty strong. And wondering, well, if bears are this strong, am I going to get strategy number 2? Get a test of average prices, inside candle, absolutely pristine and fantastic. And you can take that if you want to take that. Measured move stop. So if you go in beneath that and at the top of the candle, if you look to the left, there is a key level. So measured move stop would have been there. Depending where you get filled in, you would have probably got 1 times risk reward. By the time we get to test that low. But remember, when we take in strategy number 2, our concern is leg 1, leg 2. So you can look at it this way. So there is first leg. There is one way to look at the first leg. So there is the first leg. There is a test of average prices. So the bears want to get down here. Alternatively, you can go for a tighter leg 1, leg 2. And all you'd be saying with that is, okay, I see the breakout beneath the low of yesterday, and I'm going to use that as the measure for my first leg, and there is a second leg. So if you use that, that's a tighter measure, tighter earlier take profit, if you want to think of it that way. But of course, the bears are strong. When I get to, they may consider that as a full breakout, and they want to break out. So for strategy number 2, you need to look at the structure, look at the setup. If you want to filter out a trade, you could say to yourself, well, as long as I have 1 times risk reward for the signal, that's perfectly fine. But for strategy number 2, guys, remember, it's first leg, test of the average prices. That's the ultimate goal. So you can take the trade as long as it has set up, use that stop, and you have banked your 1 times risk reward. You could also use a wider stop, just above the low of yesterday, depending where you get triggered, and you aiming to get there and you don't get there, you should get out somewhere a break even. You get the bears failing to break out beneath the low of today, going sideways, pull your stop down to above the entry candle, or even break even, get stop down, and you don't lose any money. All right, guys, it's broadcast number 98, Dr. George. I shall catch up with you again. Take care and have an absolutely fantastic evening. Take care and bye-bye.